Welcome back, guys, to another roundtable. So my name is Adam, Victor,
Hi, Wan.
Rusmin,
Hello.
Kenny.
Hello.
Thank you for joining us. You're the fifth person joining us for this discussion today. And today we're going to talk about Amazon and how Amazon really makes money. So when we think about Amazon, you really think about e-commerce and how they're the everything store and they sell almost anything anywhere in the world. But we're going to have a look at Amazon's business model and actually find out if that's actually true and how Amazon actually makes money. So tell us a bit more about Amazon's business model and or their business segments and what the business is all about.
So Amazon has two business segments. Firstly is their e-commerce business as we know it, and it's split between international and North America, which is their US e-commerce store. So in total, that brings in about $340 billion in revenue last year, as opposed to AWS of $45 billion, which is small in comparison.
AWS is their cloud.
Yeah, so
right?
to put into perspective of what Kenny has said, right, AWS is about 11.8% of the total sales.
So the huge amount of revenue actually comes from e-commerce, which is what most people actually see or assume to be true, which is true.
Yep.
Yeah. But then e-commerce is, of course, a very competitive business and a capital-intensive business because it requires to build out fulfillment centers and all. But then if you were to look in terms of the bottom line, in terms of operating income, AWS actually brings in 59% of their operating income as opposed to 41% for e-commerce.
So to put into context, their total operating profit before tax was about 23 billion in 2020. AWS alone is about 13.5 billion.
Yep.
Which is substantial in terms of our profit.
I think they are able to do that because their margin was very high for AWS. It's at about 29.8% operating margin.
Okay.
So for the e-commerce margin, I think Kenny got the number right.
Yeah, so for the e-commerce margin, I'm just going to break it out into two segments, right? So for the North America, it's about 3.7%. And that's pretty close to what Costco is doing because they are basically modeled after Costco. They sell Prime memberships and then they are selling everyday stuff, basically the stuff that you need. So that's about 3.5% for Costco. So they are at 3.7%. So roughly around there. And of course, their relatively new business in the international markets is 0.7%, which they recently just broke a profit. I think because of COVID, they have that scale that came in. And of course, I don't think they're going to rest down there. I think they're going to reinvest a lot of capital back in the business and grow their international presence.
So if you actually take a look at it, Amazon actually makes a lot more money from their cloud business, the AWS, compared to e-commerce because of the margins involved.
Yep.
So like you're saying, AWS margin is almost
29.8%.
almost 30%.
Yeah.
And then when it comes to e-commerce in North America anyway, it's 3%. Which is super thin.
Yeah.
Yes.
So obviously a lot of money is going to be made from the cloud business. So actually when you take a look at Amazon, you're actually looking at a company that makes a lot more money from cloud, the growth of the cloud industry. And e-commerce is, they're still going to make money from e-commerce, right?
Yep.
Yeah, people are going to shop online and everything. But it looks like the growth potential of the cloud industry is going to be a huge driver for Amazon because of the amount of profit that they generate from that. So tell us a bit more about the growth potential of the cloud industry. How big is it going to be compared, e-commerce is going to be big, but how big is the cloud going to be?
So based on a report that I found, it said that the cloud computing industry, this includes the three segments, basically infrastructure as a service, platform as a service, and software as a service. So these three added together is expected to grow by a compounded annual growth rate of 17.5% to $832 billion in 2025. That's more than double of the current market size in 2020 of $371 billion. Yeah.
So it's it's here to stay. COVID has basically accelerated our habits. Everything is done online, right?
Yeah.
Nowadays, it's our habits.
Yeah, you're watching this video on the cloud.
Yeah. On Google, as a cloud.
Netflix.
Netflix as well as on the cloud.
Yep.
And actually, Netflix is one of the biggest Amazon's
Customers,
right?
Yeah, so that's true. So I think with COVID, what COVID does is it accelerated the digitization. So basically, I've seen a report by McKinsey here. There are a couple charts that I want to show you. So globally, if you see, right, the number of customers who interact with digital platforms has increased from 36% to 58%, and that accelerated by 3 years. And on the corporate side, it has accelerated that by 7 years, and they are, of course, creating more digital products for their customers to interact with. For example, education now is done online and they have to record videos, and of course you have your Grab that you are also, everything is actually cloud related.
Yep.
Grab, Food Panda, what you watch, Netflix, when you travel online, when you book stuff, whether it's booking.com or Airbnb, everything is cloud related. And I think in the future it's all about having that edge, because it's all about collecting data, analyzing the data, and after that, what are you going to do with the data to anticipate the demands or the needs of their customers. So I think this will go a long way. So and businesses that does not adopt this kind of model will eventually lose out, because this is basically an edge for them.
And it actually is a lot more cost efficient for businesses to adopt. Lease a cloud infrastructure from AWS, right? Because you can save a lot. You don't have to come up with a lot of huge capex on the hardware, getting the people, and then maintain them. But they can just throw everything to AWS and then save a lot of money.
And it's cheaper as well.
Yes.
Yeah.
Okay, so in total, based on what Jeff Bezos said in his annual letter, that customers generally save 30% when they basically customers. What he's referring to is basically all the big corporate customers get to save about 30% having moved to the cloud, as opposed to building their own data centers on their own premises. But at the same time, it's of course within this industry it's just not possible for everyone to just stick to AWS, because of a lot of customers, they don't want to be locked into one single vendor, but rather they would like to have a multi-cloud system. So just having some of their so-called private information or sensitive information kept on their premise, then of course other information they will keep on the Google Cloud as well as Microsoft Azure, and not forgetting that Microsoft has a very huge enterprise customer base, so then they can upsell some of their products to them as well. Yeah.
So the top three in the cloud industry is basically AWS, Microsoft Azure, and then we have Google Cloud. And AWS was the first mover actually in this industry. And the interesting story is that how some people might be wondering, how did an e-commerce company, a company that started selling books, if you remember, right, end up in the cloud industry? And the reason was because when Amazon was growing really, really fast and they started to sell a lot of stuff through e-commerce, they started to build a lot of data centers because they really needed that capacity to able to deal with all that traffic that was coming to their site and to fulfill all that traffic and all that. And then Bezos basically realized that, hey, I'm building up so much bandwidth that I'm using for my company, but I don't use it all the time. And they started to think, maybe I could sell this to other companies that need this type of infrastructure, and that's how they got into AWS.
This is exactly what they did with the Amazon Fulfillment Center, where they actually built the logistics for themselves. Then they realized that they can actually lease out their facilities to the third-party sellers. Okay, that's where the marketplace actually happens, right?
So actually 50% of Amazon's stuff, e-commerce that's being sold, is actually through third-party suppliers and all that. So it's probably one of the reasons why the margin for the e-commerce business is a lot lower as well.
But there's a huge volume for that.
It's huge volume. E-commerce, the volume is huge. Seen by the revenue, 340 billion is a lot of money. That's every year. Not historic. It's every single year.
But if you look at the customers, the Amazon DNA, I think they are always customer obsessed, right? So by doing, taking the infrastructure or even their fulfillment centers within the control, they can actually improve the customer service. So once the customers are happy, they'll be coming back again to buy more products. So that is almost like a flywheel that they always use and refer to. You have more selection and then more better customer service, then you have more customer keep coming back, right? So they have more control on that area from the fulfillment center side.
And I'm sure they apply that to the cloud business as well to make sure that they provide the best cloud services to their clients. I mean, they're the first mover already, so they're the biggest in the industry right now. And I think a lot of they're probably on the cutting edge of what they provide in the cloud as well.
I think because they are the first mover, right, there's a lot of advantage for them. Because a lot of the customer gets stick to them, It's very sticky. It's very hard to change.
Very sticky. I mean, once everything is there, to move to another... I mean, for me to just move one website to another server is like a pain in the ass. Can you imagine if your whole entire business infrastructure is on Amazon or whatever, and to move the entire thing is just...
I mean, if you are a small business, it maybe it's...
It
maybe takes like maybe 1 or 2 days of headache for you to change. But if you are a big business like Netflix, for you to change is like I can't imagine.
High switching costs.
High switching costs.
So from the way I see it is that, of course, when it comes to the cloud business, AWS is ahead because of their features. They have more features. They have a 4 to 5 year head start. So they started in 2016 or 2006. If I'm not wrong. So then. They give them a 4 to 5 year head start, as opposed to when Microsoft came in, then eventually Google actually came in even later. So for them, they are selling the same products, but because they are able to develop all these features, they are actually not the cheapest on the market. Based on what I've seen, they are slightly a little bit more expensive because they hire all these developers to create all these tools and features that all these platforms they do not have yet right now. They're trying to catch up to that. So then, of course, there's an advantage to having that kind of premium. Of course, when they have more and more of these scales, they achieve more economies of scale. They actually, the cost for them actually go down. They actually call up the customers and tell them, hey, you know, we can help you save more money. We're going to decrease the cost for you.
There's economies of scale at play.
Economies of scale, yeah. It's pretty much like their e-commerce business at the same time, right? It's the same. The more and more customers they have, right, then they're able they more
bring the fixed cost down, right?
Yeah, bring their fixed cost down. Then they'll pass it on to customers. So the bigger that they get, the more advantage that they get over their competitors.
And it's very hard for an entrant to come in because how do you compete with Amazon? It's already been around for 20 years, I think.
I mean, don't talk about Amazon. How do you even compete with, if you talk about the clouds like Google and Microsoft, right? So it's very hard for smaller players to come in. Right?
Yeah. So I think cloud is just going to be here to stay. Our habits have been it's all digitized.
And you're going to be controlled by a few players.
Yeah. And it just makes sense for a business to just put your stuff on the cloud because it's cheaper. You can scale as you go. You have the latest security, the latest equipment, the latest, technology and everything, rather than trying to do it all by yourself. That's a huge undertaking.
Yeah.
Just outsource it to Amazon or Microsoft or somebody. Let them take care of it for you.
Yep.
So the cloud industry is going to be a huge one. I think all of us can see it. So Amazon actually makes a lot more money from cloud than from e-commerce. So let's have a look at Amazon's key financials just to give a overview of how Amazon's been performing over the last 5-10 years. So how have they been doing in terms of revenue, profit, and all that?
So in terms of revenue, judging from the size and the amount of revenue they come in, they're actually growing relatively quickly, right? Revenue for the past 10 years from 2010 has grown at a compounded annual growth rate of 27%.
Wow.
To $386 billion.
That is 10 times.
Yeah,
10 times. They've grown 10 times over the last
10x.
10 years.
But to give even another perspective is that actually the past 5 years they are growing at 29.3% for revenue. So they actually grow faster.
Because of the pandemic.
Because of COVID, right?
Yeah.
Okay. So revenue is growing, profit.
Then in terms of their net income, it actually grew at a compounded annual growth rate of 33% from 1.2 billion to 21.3 billion in 2020.
So even for a company this size, they're just growing really fast.
Yep.
It's just amazing.
Yeah.
And what about cash flow and debt and all that? So just have a look at that.
So in the cash flow, based on their cash flow, you can see 2020 there's a huge spike because they have a beneficiary of the COVID-19, right? Everyone has no choice but to shop online. So that boosted their cash flow from 3.5 billion in 2010 to 66.1 billion in 2020.
20x.
20x. And their free cash flow actually went from 1 billion in 2010 to 40.1 billion in 2020. So that's a 40x.
And they have very low debt, right?
Yeah, they have very low debt. And the reason why is because they have a negative cash conversion cycle. So basically they get paid first and they get to hold the cash for about 40 days before paying out to their suppliers. So in a way they have some kind of float to finance their short-term operations.
So
basically the supplier is financing them.
Using other people's money to grow the business. Just to put it simply.
So they do have debt, they do have long-term debt, but they issue mostly from senior bonds, so which is very low cost for them, and it actually optimizes their tax. In a way they can cut down on tax. They take on this and then it's tax when you recognize interest is basically.
That's one of the criticisms, right? Amazon is one of the biggest companies in the world and they don't pay any tax. I mean, that was the accusation that was leveled at them. And I mean, I think it's quite amazing that I don't know if they're paying tax this year or last year, but there was at one point in time there was a big discussion. I think it was during the presidential election and stuff like that.
Trump.
How come Amazon is not paying any tax? But the reason for that is because
they've been reinvesting heavily back into
the very
business.
low profit. That's why, right?
Yeah.
Because their profit, especially in the past, they are affected by depreciation. Because and amortization, because they reinvest a lot on the capex and the R&D. So they actually push down their profit so that you pay a lesser tax. But if you look at the cash flow, it's very stable. It go up. So actually the best way to look at Amazon is actually look at the cash flow, not the net profit. But of course, recent years, the net profit start to come back also. Right. So I would say that the cash flow give a better picture of Amazon as compared to the operating.
So I don't know whether
the net income.
start to show some sort of a net income because of the complaints
it's
and pay a little bit
how
more
long-
tax.
They founded in 1995, right? It's almost 30 years, and
Yeah.
then now they're showing a profit. I mean, the last 5 years.
Yeah.
So they took a really long time to show a profit.
Yeah, but in the early years, they are also making losses, and in a way, that also helps them to.
Yeah.
It's also tax deductible in
Yeah.
that sense,
Yeah.
your losses.
I mean, it's actually intentional. Right? They
Yeah.
build it
Yeah.
by design. Because Jeff Bezos, if you go and read the 1997 letters to the shareholders, he always highlighted that they rather focus on the cash flow rather than the GAAP earnings per
Yep.
share. Yeah.
So it's all focused about the growth,
Cash flow,
reinvesting the
yeah.
profits
Yep.
to make sure that Amazon is where it is today, and which
Yes.
is basically, I mean, it's like everywhere, man.
Yep.
Yeah, everywhere. So they're everything in the physical store and they're everything in the cloud as well. I mean, it's just amazing. So I think if you have a look at the financials for yourself, I mean, Amazon is, I mean, it just looks great. Nothing to complain about. So let's talk about valuation. I mean, we all know Amazon is a great company. The only question is, when do I buy? How do I buy? How do I price it? So how would you price or value Amazon?
So since the market is trained to look at cash flow, because Jeff Bezos wrote it again in his letter, you can see from this chart that I got here that the price of the company is strongly correlated to their operating cash flow, as opposed to their profits. Because in the early years it was a bit choppy, and investors got a little bit impatient because hey, how come after so long you focus on growth and all I see is top line growth and nothing much on the bottom line. But then eventually they start to see the cash flow keep growing, and that's what Wall Street is trained to focus on right now. So then you see that strong correlation with
Cash flow.
cash flow.
Yeah.
So then, of course, cash flow is the best indicator, and of course, Amazon has a very strong business. So right now, they are basically a defensive business. So their e-commerce business is pretty much like Costco that can weather any crisis. And of course, when it comes to their AWS business, it's almost like a utility business.
Yeah.
So for all the tech companies to grow, and then and when you invest in Amazon, basically you're investing in a tech company, because what's valuable about the company is their AI and their machine learning, which they use internally for them to decide where they should move their inventory, when they should order more, how do they optimize their operation. So these are all valuable tools that people are able to get when they go on AWS.
Yeah.
So
they kind of know you better than you know yourself. Is all the data.
yeah.
It's almost scary how much power that these corporations have in a way.
So next time I need advice, and you ask AI, Alexa, so what should I
What
do?
should I have for lunch today? Hey, they tell you chicken rice. Yeah, actually I was thinking of that.
No, you say that 90% of the probability that you will choose chicken rice.
So I mean it's just it's just amazing how companies have come a long way. So I mean, you would value Amazon based on cash flow. So you use the price to cash flow metric for
price to
Amazon.
operating cash flow.
Okay.
And then if you see historically, their average price to operating cash flow is about 29 times. Right now they're trading at 26 times basically. And in my view, it's actually undervalued, and it's also not
Slightly undervalued.
It's
is
slightly
it?
undervalued, and it's good enough. This company, companies like this will not be trading so far unless there's like a huge problem,
Of course, we have to put a strong caveat. I think most of us here actually own Amazon shares. So
All of us.
yeah.
So I would say that you still have to do your own homework at the end of the day.
Yeah.
We can be biased,
Yeah,
No
we can be biased.
recommendation to buy or sell.
Yeah.
Make your own decision. So, but I think just based on the data, so we're going to use historical cash flow, price to cash flow, just a comparison. So the average is 29. Now it's at 26.
Yep.
So if you use that, it looks slightly undervalued, and the runway for Amazon looks pretty much the race is still yet to run.
Yep.
Yeah.
A long way to go, man. E-commerce is here to stay. AWS cloud is here to stay. And like you're saying, it's a utilities business in a way.
Yeah, and of course they're growing their presence, because right now they are actually last year basically they invested a lot of money back into the business to grow their last mile fulfillment center. So they are invested a lot of money into the warehouses. They rev up their inventory. Then they're also investing in logistics. They are buying their own planes. They also acquire electric vans from I think DIVIDEND or something like that. And they're trying to expand and have control of logistics. And once they are good at logistics, they basically can offer that to most of the customers and become the next UPS in a sense.
Wow.
Yeah.
It could be. Yeah.
So then they are actually growing their addressable market as they go. And of course, recently they acquired MGM, right? Studios.
That's right.
Yeah,
Because of
so
the
Amazon
Video,
Prime
right?
Video.
Prime
Yeah.
Prime Video as well.
Can you see how scary
So-
Amazon is?
Yeah.
They are disrupting every industry.
So whenever they enter an industry, you can see the stock market for the industry, that particularly all the
Yeah.
companies, their stock will drop.
So I just want to come in right now because I think a lot of times for the everyday person, they might not know all these things about Amazon. They just think, oh, it's an e-commerce store, the biggest in the world. But they may not know that, oh, it's the biggest cloud provider as well. They may be the biggest logistics provider in time to come. They could be the biggest video streaming service as well. There's so many things, and this is one of the things that that we do when we basically analyze a business, to go through the business model, because you need to understand the business before you really make a an educated decision on whether you should invest or not. And that's what we actually cover in the investment quadrant, like how we look through the business models and then the financials and all that before we make a decision. So if you're interested in doing all these steps, do check out investmentquadrant.com. It's open, I think, right now. May not be open forever. We only open it once a year. Do check it out then. But I think these are the steps and the process that we go through when we look at any business. But Amazon is just amazing. If you've been through this entire roundtable, this is like almost everywhere. Yeah, it's just amazing. So I mean, we all own Amazon already. At this price, would you still buy some more?
Yeah, I don't mind.
You don't mind?
I don't mind.
Yeah, sure.
I already bought it last year, so I mean, if I have more cash coming in, of course, can always add it along the way.
I think
we got it at a very good price last year.
Was
1,700,
1,700.
Yeah.
So I mean, that was in COVID. So we've been following us since our roundtable since then. You kind of know that we've been looking at Amazon and all that stuff. So COVID was a great opportunity as well. So yeah, I think that's a really, really good wrap up about Amazon's business model. I think if you didn't know that about Amazon, I think I hope that roundtable is really eye-opening in the sense that these are all the things that are happening with Amazon in the business, and then that helps you make a decision with your investment if you're looking at Amazon. So once again, I hope you really like that. My name is Adam. This is Victor.
Thank you.
That's Kenny. Thank you for watching. If you like this video, please hit the like button to let us know that you like our content, and of course subscribe to our channel. Many more roundtables coming up with the four of us. You're the fifth person joining us for this one. Thank you once again, and we'll see you again.